Welcome back. Well, the stock of the last 20 minutes or so has to be Zomato. That stock has moved to the high point of the day. Remember, it was holding in the green, but it seems there's a fair bit of appetite out there. Currently at around 115 rupees. Mangalam joins us to give us quick analysis on those numbers. Mangalam, the numbers look good?
The numbers look very good. In fact, quarter on quarter, if you look at it, the revenues have grown by about 18 odd percent. 2850 thereabout is what the company has reported on the top line. The EBITDA loss has stayed the same despite the revenue growth. So that's only telling you that the operational performance of the company has improved from 48 crores. The loss has remained at around 47 odd crores. The company has reported a net profit of 36 crores versus 2 crores. That's an 18 times jump. So one would, intuitively ask, how is it that post an EBITDA loss, the company remains net profitable? Well, because the other income component for Zomato is very high. From 181 crores, the other income has come to around 212 crores. And secondly, they have a tax credit benefit as well, which was there at the same time last quarter. So in the previous quarter, there was a tax credit of 17 crores. Now there is a tax credit of around 16 odd crores. The important and the big positive part here is that the cash flow from operations has moved from a negative 488 crores to a positive 288 crores. That's year on year. So that's something that, really stands out in terms of their numbers. So cash burn has negated, and now the company keeps adding cash every quarter. And secondly, the core of the business, which is the food delivery business, it has shown a revenue growth of 13%, and out there the margins have been maintained. So the EBITDA of the food business from 186 crores has jumped all the way to 210 crores, similar growth rate as the revenue itself. The quick commerce business, which is now the growth driver of the company, has seen a quarter-on-quarter jump of 32% in the revenues. 384 crores has turned into 505 crores, and the EBIT loss has narrowed out there. So 105 crores EBIT loss has turned into 94 crore EBIT loss. So as revenue grows there, this business is likely to turn around as well, and that's what the management has been talking about too. Hyperpure, which is the restaurant supplies business, that has seen a revenue growth of 21%, and out there too the EBIT losses have been contained. So short point, revenue has grown while the losses have been contained, and in their core the margin has expanded. In the Hyperpure business, the losses have been contained, whereas Blinkit, the losses have actually narrowed. All these things bode well. The company's cash burn has stopped, and as a result of which the street rejoices these numbers.
Okay, thank you very much for explaining each of the segments in great detail. That's Zomato for you, pretty much firing on all cylinders. But back to talking about the